The King.
The Right Honourable Rachel Reeves, Member of Parliament for Leeds West and Pudsey.
As the world changes before our eyes and global economies are becoming more uncertain, the job of a responsible government is not just to watch that change. We must step up, not step back. We must build a dynamic economy on strong and secure foundations, where success is not limited to a handful of sectors, a few people, or certain parts of the country, but where the rewards of hard work are shared, harnessing the contribution of every part of Britain. This is the foundation of an economy and a country that is more active and more confident, where people and business look to the future and talk about hope, talk about opportunity, assured of their own capability and the ability of our country to boldly face the challenges ahead. And that is why the Prime Minister and I and this government remain committed to our non-negotiable fiscal rules. The stability that we have restored is already delivering. 4 cuts in interest rates by the Bank of England since the general election, reducing the cost of mortgages and of business lending. Real wages up by more in the first 10 months of this Labour government than they increased by in the first 10 years of the previous Conservative government. And investment is returning to our economy. The UK economy is enhanced by its outward-facing approach. And this year, we have built on that with our new trade deals. A trade deal with the United States, where we were the first country to sign a deal so that British businesses are better protected against tariffs, and where we have worked with our G7 colleagues to avert new taxes. I am supporting the Bank of England's decision to raise the asset threshold for MREL requirements to between £25 and £40 billion. This will benefit the challenger banks and bring increased competition and innovation to the market and support those businesses to expand their footprint here in the UK. I have committed to meaningful reform of the UK's ring-fencing regime, recognising that now is the time to go further in tackling inefficiency and boosting growth, while retaining the aspects of the regime that support financial stability and protect consumer deposits. As I look ahead, it is clear that there is more that we must do. In too many areas, regulation still acts as a boot on the neck of businesses, choking off the enterprise and innovation that is the lifeblood of economic growth. Regulators in other sectors must take up the call that I make this evening, not to bend to the temptation of excessive caution, but to boldly regulate for growth, in the service of prosperity for our whole country.
For the Governor of the Bank of England, Mr. Andrew Bailey.
Recent events have exposed fault lines in the multilateral system of relations between nations, and that, of course, includes very much in the global trading system. And a perceived failure to deal with what is seen as persistent global imbalances. Well, deficit countries have historically faced far more pressure to correct excess current account balances than surplus countries. And this correction typically takes the form of financial market pressure for deficit countries. And that financial market pressure point could be relevant, even though we're talking here about the reserve currency. It's very hard to judge the limits of sustainability, and of course we've seen market disturbances in recent times, in recent months. So we do have to be on high alert to the financial stability risks, something that I can assure you both the Bank of England and the Financial Stability Board are following, and a few others too. Surplus countries don't face that same financing pressure. The pressure to adjust, as we are seeing today, can come more through threats of tariffs and trade barriers. But increasing tariffs creates the risk of fragmenting the world economy and reducing activity. So there is a common interest globally in tackling excess imbalances before dangerous levels of trade restrictions come into play, and before we face the prospect of difficult adjustment and volatility and financial instability. And I would contend that this is where the multilateral system comes into play. Now, the IMF doesn't have policy levers in its possession directly to address global imbalances, but it has got a crucial role to play in facilitating globally beneficial adjustment through its surveillance. It plays a central role in casting a very rigorous and independent eye over the economic and financial systems of individual countries and the world as a whole, and providing timely warnings where problems are being stored up for the future, and giving its members sound advice on how to mitigate risks. The Lord Mayor and the Lady Mayoress.